Hey everyone, welcome to another episode of the Market Disruptors Show. Today I'm sitting down with Paul Matisik. He is the CEO of Gold X, which is a gold mining company. You know I love to learn from experts, and he is one of them. A gold mining legend, sold multiple companies for over $2.5 billion. Amazing track record. I can't wait to dig in and see what we can learn from him. Paul, thank you so much for taking the time to sit down with us today.
Oh, thanks, Mark. It's a pleasure.
Yeah. So as I said in the intro, and anybody that's been watching my show and my channel knows that I believe success leaves clues. And so I study successful people to see what clues I can pick up and I can duplicate. And my goal is that I can find people like you where I can learn from and then try to share it back with the audience. So I appreciate that. Of course, I've been doing research into you, which is why I invited you on the show. But for people that don't know, give us a background. I mean, I said you sold 5 companies. Give us a little bit of background on what you've been doing and what you're doing right now.
Okay. Well, I'm a geologist by training many moons ago, but I'm like a serial entrepreneur. I love the challenges of creating shareholder wealth, and I've been blessed to be able to sell 5 companies over the span from 2007 to today. And it's a very simple formula that I've used to do this. I've done it in 4 different commodities. I've done it in uranium, and I've done it in potash. I've done it in lithium twice, and I've done it in gold. And so the formula really is to, I've been really good at picking a cycle, looking at where I think a metal market might grow. Like, so for instance, uranium, which is one of my first forays in 2007, where the price of uranium was $10 a pound. And so I had a belief through readings and do what you do, read the newspapers, hearsay, right, Oprah, wherever. And I thought, no, I think uranium's not a sunset industry. I think it's going to go at least to $50. And I need a plan on how I can make money at that, being a geologist, running mining companies. And, sometimes people say, well, why don't you just buy the physical, like buy uranium? And that could make me money. And I thought, well, that's one way of doing it. But I thought, where do you need the most uranium in the world? And that's the United States of America. So I said, I need a plan to become the largest owner of uranium resources in the U.S. Okay. And this is a time when everybody thought it would be a sunset industry.
Was this back in 2007?
This is in 2007. So I accumulated, and my partner was another great guy called Bill Sheriff, accumulated and became the largest resource holder of uranium in the United States between 2007 and 2009. I did it through just claims taking. I did it by taking over 3 companies in the space of 1 year, and the price of uranium. And then I built a team around it. And I found I went from 4 people to 200. I hired the best people in the industry. And through a series of events, uranium kept going from $10 to $15 to $25 to $50. And my stock went from having a market cap of 5 million to 10 million to 50 million to 100 million to 400 million. I was the fastest growing company in Canada.
Wow.
In 1 year. And then I decided to go in the New York Stock Exchange, one of the first uranium companies in the New York Stock Exchange. And the stock went up to $18. Okay, and that was from starting at 10 cents. And that was in the space of 3 years. And so we were on the stock exchange, but I had a feeling that uranium had reached its highest summit. It was over $110. Okay. And I thought it was, I had some assets that were going into production, but I thought I'd serve my shareholders better if I sold. So I sold to a company called Uranium One. It was for $1.8 billion. Okay.
Of course, anybody who knows about uranium has heard of that company.
Yes. So of course, exactly. So I sold it to them, and so that's what started me. And it was, it was de-risking, it was doing feasibility studies, all the things that miners do.
Yeah.
And then I followed that up with a very similar story. Potash. Potash was a hot thing.
What is potash? I'm not
Potash
even
is a
familiar.
fertilizer, mostly used for fertilizer.
Okay.
When your lovely wife buys, has fertilizer bags, has three numbers, 10, 10, 10, or 20, 20, 20, and it's potassium, phosphate, and nitrogen. Okay.
Okay.
And one of them is potash, and potash makes things grow tall, strengthens things that grow tall, like
Okay.
great for corn, good for wine. So I thought, geez, potash was trading at $100 a ton, and I thought, geez, I think it's going to go higher. And so I did the same thing. Actually, this time I discovered something. I went to the Saudi Arabia of potash, which is in Saskatchewan, lovely place, great people. And I drilled 7 holes, and I found a huge resource. And I parlayed all of that, and it was the first time I met Robert Friedland. He asked me if he could come on board and to help me monetize that asset. And because putting potash deposits into production are billions and billions of dollars. Okay. So within the space of 3 years, I had drilled, got a pre-feasibility study, a feasibility study, and a permit. And, I needed, I think, $2 billion to put this in production. So with the help of Robert and myself, we managed to find a buyer. That's after talking to the Chinese and talking to Rio Tinto, a bunch of companies,
Yep.
to a company called K+S, and they paid Potash One shareholders $434 million cash.
Wow.
And they subsequently spent over $3 billion to put that in production. So that was I called it the Legacy Project. They changed it to the Bethune Project.
Nice.
So that, again, was in the space of 3 years, from concept to sale, and a mine 4 years later. So right. I repeated that again. I could just do one more quick one. I did the company called Lithium One. And I had a sense back in 2012 that lithium, that EV cars will become a big thing.
Yeah.
Okay. And so I thought, that the world's going to go electric through lithium. And so I thought, geez, I need to find a lithium deposit. So there's another company that was 5 cents. And so I headed down to Argentina. That is the Saudi Arabia. Of lithium. And I staked beside another mine, and I got a really good salar, and did the same thing. I spent 2 or 3 years, did staking, figured out how to actually categorize lithium deposits, and sold it to a company called Galaxy Resources for $112 million. And I think I sold that one a little too early, because Galaxy took that asset and another and made it $1 billion.
Wow.
Okay?
We always say that you never go wrong taking a profit, right? So
you never do.
Yeah.
And then subsequently, they've sold just half of the asset that I had in Argentina to POSCO for $350 million just recently.
Wow.
So that's the pattern of finding a trend, a cycle, finding a large asset if you can, or making a large asset, de-risking it, and then deciding monetize it. If you think that the commodity is going to be strong, then I would build. If you think that it's at the top of its cycle, then obviously you would like to sell.
Yeah.
And so in many cases, I've been lucky enough to exit when the cycle had turned. Like, look at uranium. I think the day after I sold Energy Metals, the price of uranium went from $100 to, I think it's $30 today, and it hasn't recovered. And that was in 2011.
Yeah.
Okay.
But now you've picked up on a new cycle, and you're doing the same repeatable pattern, but on a new cycle now.
So I thought gold
on that.
Yeah. So gold, for a variety of reasons, that is a very attractive commodity. We're in hyperinflation. Trump and everybody is pouring out U.S. dollars like it's going out of style. So it's a great asset for that. And I thought, geez, I think I started looking at Gold X. The price of gold was $1,400, and I thought, and I can go through that this company, it was called Sand Spring Resources at the time, was misunderstood, forlorn, not loved, and yet it had a 7.35 million ounce deposit and over $150 million spent on it. And I thought, this is perfect. I need like a large, and I thought, if obviously if you're trying to get leverage on the gold price, as an increasing gold price, you want a big asset.
Of course.
Because every dollar the price of gold goes up, you have 7 million factors that go up with it.
Right.
And so I, in September, I became advisor for the group. And I thought, I've got a plan. I got a plan how we can take this moribund company that barely trades and has a great asset and turn it into something. And so I did simple things, and I rebranded it to X's. Most of my companies are either X's or ones. So it became Gold X Mining. I didn't split the stock, but I consolidated the stock 8-to-1. So that wasn't a penny stock anymore, and people didn't have a penny thought idea in it. And I raised $20 million in debenture to buy out the local partners, so secure 100% ownership of the asset. And then I took over. I became officially once those were done, and I knew we had 100% of the asset, I became the CEO on April 1 of this year, and our stock at that time was trading at $1 a share. Wow. Okay, and that's where I made my placement into the company, and I made a commitment there. And then I started I did hundreds and hundreds of Zoom calls and trying to get at people, understand what the misunderstandings about this asset. And I'm always, opportunistic and strategic. There was a company 50 kilometers down the road called Guyana Goldfields, and it was running into trouble, and they had exhausted their surface resources. They had this big mill that could accommodate 7,500 tons per day, and now they were trying to develop a mine of 2,500 tons a day. And so I, with my largest shareholder, made a bid for that, for the access to their not for the resources, but for their production, for their mill, because it would have huge impact on the capex of our company. Unfortunately, I was not successful. Someone outbid me by threefold. Zijin, a very astute group, Chinese group, who bought it for $1.80. And it's good to have a big company like that, but we're still 50 kilometers away, and we still have that synergy that we can work with.
So now you're the CEO of Gold X Mining, and that's kind of what you're doing. So that's good. You mentioned that you have a simple formula, and what I like about this is that you've proven it's repeatable. So, you've done it in uranium, you did it in potash, you did it in lithium, and now you're turning that to gold. Now, for everybody that's listening, make sure you stick around, because at the end, I'm going to make sure we nail Paul down for that 3-step formula so we can try to figure out how we can apply that to our own investments. So we'll circle back to that before the end. So make sure you stick around. But what I want to dig into a little bit here is, I'm obviously really into gold. I talk about it on my channel all the time. I'm buying lots of gold miners, junior miners, so I can get that leverage. And when I'm buying stock, I'm an owner of a company. I'm obviously a very, very tiny minority, but I still like to look at it the same way. We get massive leverage, just like someone that owns a lot of shares do. We can do it on a little bit. So I'm curious how you think through mining. Gold mining specifically, how you value it, so I can learn to do the same. And I know there's two big categories of it, right? You have kind of like the majors, and then you have the miners. And it seems like the juniors are the ones that are kind of like exploring and finding it, and their real path is like acquisitions at some point. And the majors are the ones that are kind of putting out the massive gold. Is that how that works? Do I have that right?
Yeah, generally. There's actually 3 types. I call them Explore Co companies. Okay. Those are those high-risk people, geologists with maps and dreams, okay? And they're an essential part of the ecosystem, okay? They're the ones where, like a Chuck Fipke who found the first diamond mine in Canada, okay?
Okay.
You listen to him, you think, I guy must be on drugs. But
Right.
that man had single-handedly made Canada the number one producer of diamonds because he had a dream. And, you could have invested with him at 50 cents and now that's worth $1,000, that 50
Right.
cents, okay? So, but those are rare events, okay? The law of probability works against you. For every 100 Explorer Co out there, maybe one moves on to something that's significant, okay? And then there's developed codes like myself. They have got through the exploration phase. They found something, okay? But they're not trading. Let's say if we put if mining companies that like a Newmont, okay, they trade at, let's say, 100, like they react to the price of gold because they've got mines. So the price of gold goes up, their profits go up. You can tag them and you can look at their price to NAV and decide, oh, geez, this is a well-run company. And if gold goes up, they're going to go up, okay? But there's not much leverage as being an explorer co. There's lots of risk, but if they hit, you make a lot of money. The next level of risk is like a developed co company like myself, okay? So we have 7.5 million ounces, okay? But we need to find the money to develop it. So there's little hair that you need to clean, okay? Right. So either you clean all that up and then you become very attractive to like a Newmont or to a Barrick or to a Zijin, okay?
Right.
So that's kind of what I do. I look at what the hair is. Why isn't it that, and developed codes will trade at 0.25, 0.3 of what they should have if they were a big major mining companies. If I told you most of the companies called net asset value that I sold between 0.4 and 0.5 of their net asset value.
Okay.
Right now, GoldX is trading at 0.18. Okay.
Low.
So there's a lot of scope there.
Yeah.
So I am either underperforming or there's an undervalue or there's more value to be created.
Yeah, I love that point. I love that point because it rings true, and it's what I always talk about on my channel, right? Trying to find that undervalued asset, as you talk about the hair, right? Something that you can clean off. I spent the first 10 years of my investing career just in real estate, and same thing, right? What's wrong with this piece of real estate? What can I do to fix it up, right? And I look at all things like that, and I think as investors we should always do that. So I love to hear that approach. So it's the explorers have the ton of risk because the chance of them finding is very low. For you, the risk is a lot less because you have the asset, but the question is, can you improve it to the point that needs to be done? It makes perfect sense. I like that.
Yeah, and you can see that from September or from when I started April 1st, when it was $1, today it closed at $4. That's 4 times your return in less than 4 months.
Wow. I like those types of returns.
So, and that, and so it's not me. I've got great, capable people that work with me. And so those are a series of steps, and for some gold minings, like that are developed codes, it may be a metallurgical issue. They're getting better recoveries. Some may be jurisdictional. They got a permit where they could never get a permit. Okay. Some are that they've got a better mining method. So you look at each individual story and you say, how do we unlock the value?
Right.
If you called me anything, I'm an unlocker of shareholder value.
Yeah, okay? I love that.
I can find something and go here, and they're not like, brain science is something you do diligent work, okay? Go through the process, okay? What is, in an analysis of variance, what is the key feature that I need to fix to unlock that value? Okay?
Yeah, I love that.
So...
in real estate, like I said, I spent the first 10 years doing that, and I could tell you all the ways that you can do that. I've been investing in gold for about a decade now, and I constantly talk on this channel about ways that I look for undervalued assets in gold mining, but I would certainly love to hear if you had any ideas. I guess the first thing is, I look for is like, is the asset good, and is it being mispriced some way? right? And something that you can fix, like you mentioned, like permits or something like that.
Yeah. So in our case, there was a drag on the stock because the company, prior to me managing it, we didn't own the property. Okay.
Okay.
We had an option to purchase. So that's a level of risk. Because so we managed to raise $20 million to buy out the original, the guys that originally owned the property. And they're out. So we don't have to deal with that drama. Okay. Now we own it. And I did it through a convertible debenture. So here's where it even gets better. So when we had that convertible debenture, we were trading at $1. We priced it at $3.20 that we could buy you out. We can give you our share at $3.20 or we'll give you cash.
Okay.
So 3 weeks ago, our stock blew by $3.20. Now it's like $3.90.
Oh.
So I phoned up the debenture holders and say, do you want the cash? Because I think we can finance it. Or do you want the paper? Everybody took the paper.
Yeah.
So now there's no debt in this company, right? We've got happy shareholders. We're trading at $4. They can sell their shares at $3.20. So they've made money. And I saved the company with a convertible debenture. There's usually like a coupon you pay, and our coupon was 10%.
Yeah.
So that's like almost $5 million of savings just there.
Yeah.
So
that's amazing. That's a deal that only somebody with your experience could do, right? I mean, that's what you bring to the table. Yeah. Having built many businesses, I've built 7 and 8 figure businesses. I've invested in all different types of things. One thing I've always learned is that people, right, people are so important, because you can have the best idea in the world, but it's all about the execution. And it sounds like, based off of what you're saying, that's also part of your formula. I know when I'm looking at gold mining companies, or any company for that matter, one of the very first things I look for is management. And I just figure looking at the management allows me to filter all the junk out, because good management wouldn't work for a bad company. And so I know, so then I saw you, and you've had this successful track record. And then you mentioned how you brought, I think, was it Robert over, so you're bringing that same core team with you. So is that, I think you're putting the same emphasis on team?
Yes, if I can highlight that. So you need 2 things. One is good shareholders that support you. And I'll talk about that, and a good staff. And I tend to work with a very small group, and in my main group, I have an excellent CFO. His name is Bassam Mubarak, who's been involved in my last 3 deals. He's brilliant. He was the architect of the debenture, so you can tip my hat to him. I have 2 capable executives, and Richard Munson, he was the past CEO, and Greg Barnes is the VP of development. So this team of 4. And I have also a good strategic advisor, Brian Pace Braga. That group, that core group, is the one that works the day-to-day. Make sure the market is fine. Make sure that we're getting all the technical and the commercial work done. Okay. And without them, I am a tenth of the man that I am. Strategically, we always look to enhance our board and so that, it gives you better networking, better access to capital. And we were fortunate enough, and through my friendship, to get Robert Friedland. And he's an icon. The man is probably the #1 mining promoter in the world.
Wow.
He runs Ivanhoe Mines. It's a $5 billion deposit. He manages to be a better unlocker of value than I am. Whatever he puts his hands on turns literally to gold. And he brings to this company, and when he actually came on board, our stock almost went up 25%. Okay. He brings the ability of his own team. So that synergy of his own mind building team, and access to that is good, and access to his capital is good. So that was a coup for us.
Yeah. Okay. And sorry, did I cut you off?
Yeah. And in terms of shareholders, we have Grand Colombian. It's a gold mining company listed on TSX, who mines gold out of Colombia with a $500 million market cap. They own 20% of it, and and the CEO there is on our board, and I know the chairman quite well, and they're 100% supportive of it. And then we also have Precious Wheaton Metals, who is a royalty company that is the next largest shareholder, and they're 100% behind us, and they've actually offered us a financing. So if we ever go into production, they will finance up to $120 million. Okay.
Yeah, that's awesome. Yeah, I know. I mean, like I said, I've been kind of following the gold market for a while. Obviously, I don't know it that well. I wouldn't call myself an expert in it, but I just look at these types of things, like who is leading the team, but not only just who's leading the team. And so easy to see your track record. And I know success leaves, you can follow the success, but also who those advisors are. So anybody that's in precious metals at all probably knows who, Precious Wheaton is and things like that. Yeah. So that's good. I mean, like I said, right off the bat, that filters out all the junk, because there's a lot of junk out there. But I just figured that, a good team wouldn't be there.
I tell people that, a lot of this game is back to jockey. Okay. If you can have a good horse and a good jockey, I mean, you've got a chance to win the Triple Crown.
Yeah.
Okay? So, people, they're the main element in any type of, in movies and in real estate. Those people, it's the people that make things different. Okay.
Now, one question I'd like to ask you about is, I know Gold X, your mine is in Guyana, right?
Yeah.
And a lot of gold people, there's a lot of noise going around the industry, and I get asked this question all the time, and I think it's a fair question to ask you. A lot of people seem to think that there's a lot of political instability in some of these countries, which there are. Obviously, a lot of gold mine is in third world countries, things like that. Could be Africa, South America, wherever. And now there's this narrative that's been pushed that if the U.S. isn't exchanging dollars, swap lines with the country, then they're in dangerous political problems, and there's high probability that the country could nationalize that mine, and as an investor, I could lose everything. Now, you own a mine or whatever, you're part owner. What do you think about that?
I think that's bullshit, actually.
Okay.
Okay. I think that Guyana, English-speaking democratic country, they had their fair shares. They've been through the throes of an election issue, an election recount, similar to that Trump had.
Sure.
Okay. And we didn't do anything about that. And they've now resolved that issue. So now there is a standing party, and the country will go back to where it's been. It's supported. It's a member of the Commonwealth of Nations. Is governed by the British law. As far as they're for financing. They're supported by the IFC. There's nothing that I've seen that gives me cause of concern that they're going to nationalize these resources. Okay. Right now, they're also blessed. Like, they've had a huge offshore oil discovery. Okay. Oh. Probably one of the largest ones ever. It's going to totally change the complexion of this very small country. I think it's got, 5 million, 7 million people in it. Okay.
Wow.
And what that's going to do is going to put a lot of money into the government coffers. Okay. So they can electrify the country, educate the country, and build infrastructure. All those things are really supportive of mining. Okay. I've worked in Guyana previously for another company, and I find that working with the government is being transparent. They want, that was their main source of revenue, was mining.
Right.
Okay. Now with oil, I think mining will be like this, oil will be like this.
That's good.
So I don't really see them nationalizing this little breadcrumb. Personally.
Right. Well, and by them doing that, it really puts them back into the dark ages. No company would ever do, or no country would even want to do business with them if they did something like that. So I kind of look at the same thing. I mean, of course, we don't have a crystal ball. Anything is possible, especially in today's age. And everything that we do has risk. And so you want to always manage for that. But the chance of that is low, would be in my opinion. And as you said, it would be the death wish, or I said it would be the death wish. And if you're looking at something big like oil, you're not gonna, what do we call it, like step over dollars to pick up pennies or something, right?
Yeah. No, I think I love working in Guyana, and I think it's a very good population to work in. The government, as I say, is transparent. I think that they're very good for the mining industry, and I think they're blessed with riches. I hope they manage them well.
Yeah. Okay, great. Well, thanks for answering that. Like I said, I get asked that question all the time and I answer it, but of course I want to hear it from you. You have a lot more on the line than I do. So I kind of gave, in one of my previous gold mining videos, I kind of gave my criteria was team. And these are easier things for me to look at, like team, obviously. Like I said, good team wouldn't be in a bad company. I want to look at like their reserves, make sure you're sitting on good gold reserves. And yours appear to be pretty tested. I mean, you have a bunch, which is 700 million or something.
5 million.
Yeah. So, and then financials. And I know you can burn through a lot of money, but you have a lot of backing with Precious Wheaton. Right. Is there other things that like the average retail investor like myself should be looking at when we're investing into gold miners?
So people are key. The ability to finance. And so when we wanted to make a debenture to buy our project from an existing owner, I think it took us 3 weeks to find the $20 million. Okay.
Okay.
We have Wheaton Precious Metal and a lot of insiders. Insiders make up close to like 49%. Okay. And they're all people of means that I've been supporting this project for many, many years. So I would, and so that's another thing that you should be aware of. We get offered financings almost on a weekly basis from brokerage groups. Okay. We turn them down because, one thing about the companies that I run is that I like to keep the share count very low. Okay. I don't mind diluting, but if I spend $1, I want to make $4 or $5 worth of value.
So does that mean that me as a retail investor or other retail investors, we should look at outstanding share count?
I think so. I think you should look at how many shares are out there and whether their market cap is realistic. A lot of people, CEOs claim that, oh, look, my market cap's 600 million. Yeah, well, it's 600 million, but the last 5 years it's been trading at 30 cents.
Right.
And you as an investor made no money.
Right. Okay. Good point.
Focus on share value. Okay.
Share
value appreciation if I were invested. Okay.
Great.
Has this group took something and gave you share value.
Okay. Good point. I appreciate that. A lot of the stuff, you talked about like finding that undervalued asset and finding something that had a little hair on it you can clean up. And a lot of that stuff isn't really visible to us as retail investors. And so that's why I was kind of curious, like what are the things that we would look at? And like I said, team and financials and reserves are stuff that I have access to. The little secret hair, the permit or whatever it is, as you say, I don't really have access to that, but definitely market cap and share value, as you talk about, is something that we can all look at. Anything else that comes to mind?
Well, because of the regulations that were put in place, we have a lot of transparency. We do quarterlies, we do AGMs. All our resources have standards that are followed by throughout the world. I think mining is sometimes over-regulated, but it's to protect the shareholder. So if an investor really wants to understand a company, look at the quarterlies, look at the 43-101s that talk about the resources, how they were done. These resources that are quoted for us are done like we did. I forgot how many. I tell you the exact number of meters of drilling that we did. We did 202,000 meters of drilling.
Wow.
We did almost 700 drill holes to define this resource. Okay.
Wow.
So, and that gives you a measured indicated resource. Okay. This is better than an inferred resource.
Because each time you drill a hole, you're checking what the density is of gold in those areas. And so the more holes you drill, then the better your estimations are. Am I correct with that?
100%.
Okay.
So you can imagine that, each drill hole has an area of influence that you can make some judgment on. Okay.
Okay.
So if you have one drill hole here and one drill hole a mile away, and there's a hit here and a hit there, and there's no geological reason why they should be connected. In the past, people say, oh yeah, they're connected.
Right.
But, there's been a lot of work being done through the use of geology and structure and fantastic software. People can look at, measure, and indicate the influence of one hole may be only 4 or 5 meters.
Mm-hmm.
That's it.
Yeah.
Of 10 meters, okay, depending on the type of geology.
Yep.
So the more holes you have, the more geology you have, the more rigorous and the more believable your resource are.
Yeah.
There are many sad stories where someone has done a resource on an inferred basis or like wide space drilling and said, what the heck, we're going to go, the market is hot, we're going to go and mine this bloody thing.
Right.
So they spend all this money building all this infrastructure, processing facilities, and lo and behold, the resource isn't there.
Yeah.
Okay. So look at the resource, ask questions there. They're often written for the layman, and I find that people that care about their shareholders will spend time with them and say, this is what you have to understand about our drilling. This is how our resource was based. And there's numerous maps and drill intersections and lawn sections.
Yep.
It's fascinating, to look at.
Yeah, I've looked, I look at a lot of different mining companies, and that's definitely something, as you say, they put out. And 700 drill holes is a lot. Typically, I see much less. And a lot of times when you've looked at enough of them, you can tell like this company's kind of fudging on their numbers a little bit, right? Yeah. I also did quite a bit in oil as well, and oil is kind of similar. They're trying to estimate off of one well or something like that. But yeah, 700 drill wells is a lot. Another thing that you said that I like as well is, we all need to. We all need to. Well, I really like investing into gold mine, especially. I just made a video yesterday. I call it the trade of the decade. The way that I see debt and inflation and whatnot. And so I do believe that gold and gold mining is the place to be. That being said, everybody should be doing their own due diligence. And so, because I have a show, I'm able to get someone like you on the phone or on the call and ask these questions. But as you pointed out, everybody could reach out to the company. You have like PR departments and sales departments that are there to answer people's questions, right?
Yeah. I mean, so they're there to, I tell people to look at like good PowerPoints, corporate presentations. So, we do a good job trying to get key information out to people. We do a lot of comparables. If you go look at our PowerPoint, we compare ourselves to other companies so that you can say, well, why are they trading higher than lower? So you can start, questioning, those questions. And I find that the more educated investor you have, the better it is for companies that actually have good things.
Yeah.
Okay. So, an ignorant investor or one that's not so well educated, they go from pillar to post. They don't know where they're going, or they're following the crowd.
Right.
And that, sometimes that works. It's a great thing. Okay. Like we're now, I would say, in the time of gold investing where all boats float. If you know that thing. So
yeah, for sure.
Anything that has gold in it is going up. It's like the .com era. Okay. So you probably will not hurt yourself, but you may lose out on something that was phenomenally better than the investment that you made.
Right.
Okay? And so you need a fair smattering of maybe some of the major companies, maybe some of the development companies, and a little bit of the, you make a portfolio. So you transcend all those things. Eh?
Yeah.
But, but in each portfolio, in each group, there's some winners and there's some losers.
Right.
Okay? And I would say try to talk to people, read the PowerPoints, start be familiar with, after tax, free cash flow. There's a lot of different terminology that one needs to know. And these are all standard ways that companies have to report.
Right.
Okay?
Right.
Like resources are reported in a certain way, enterprise value, okay, is a certain way. Okay. So they're comparable. So if you look at on our corporate presentation, we do comparables, so we can compare an apple with an apple. Okay,
Yep.
and that's
Love
what
that.
you want to do.
Yeah, I love that. Now we're going to wrap it up here. I know we're already going long, and I really appreciate you giving me as much time as you have already. I want to recap your simple formula for having success. And I've written it down to what I think it is. And I want to just recap that and let kind of how I think that I can use it and how people watching could also use that. Before I jump into that final thing though, I'm just curious. Well, the first one of your formulas is picking a cycle. And you obviously did really good with uranium, potash, lithium. You picked those cycles right. And now you've just jumped into gold. And based off of 3 in a row, you're pretty good at picking cycles. So what is it that you see about jumping into the gold cycle right now? What makes you think that the cycle's good? Do you want to say how long or how high you think it goes?
No, well, it's probably, for me, I'm not that predictor of like how long, but we're printing so much money. There's going to be so much inflation. Gold provides maybe a place where, whether you're in Peru or Paraguay, people will know what the gold is. So, and you're not tarnished by a currency devaluation and inflation. So I really like that point of it. I just thought, and then I look at the experts. I look at Bank of America. They have a $3,000 limit. Okay,
right.
And you have Goldman Sachs that is $2,300.
Yep.
Okay, so these are very conservative groups that are giving you these numbers. This isn't some crazy newsletter writer that wants to let you buy gold stock.
Yeah, right. Exactly.
So they're consensus of that, and I really do believe that the cycle is 18, 20 months, and there's a momentum. There'll be down days, but I could probably see $2,200 gold before December.
Yeah.
Okay? And that's going to, and then it becomes a race to production, how to value your ounces the best way. Okay.
Yep. So,
take advantage of that high gold environment.
So I'm more bullish. I think it goes higher than that, but either way, that's pretty good. I just figured, in 2008 when the market dropped, the stocks dropped 50%, gold dropped 25%. But it was the response to the drop. The Fed jumped in with their TARP bailout, $700 billion, and gold shot from 680 to 2,000.
Yeah.
And that was off of 700 billion. Well, today we've just done 6 trillion. So even if we had the same move as in 2008, that puts gold to like $4,000. That's just on the same size move, but we've just printed 7 times the money.
Yeah, so, no, it's unheard of.
Yeah, it's unheard of.
Yeah, so it could be an incredible ride, and it's and for companies that are going to production or in production, it'd be a great place to.
Yeah.
You can imagine in areas and countries where the currency is being devalued, they're going to be paid in U.S. dollars. Okay,
yeah.
Like in Canada, our gold is like we're 0.70 cents. So 2,000, it's like we're trading at like $2,600 gold,
right?
In our currency. So it's unheard of. So being a producer is a good thing.
Now, why doesn't Canada have any gold?
Oh no, we have lots of gold mines.
Oh, yeah. No, the country.
What do you mean it doesn't have any gold? Oh, why we sell all our gold?
I believe Canada doesn't own any gold, right?
Yeah,
the country.
Yeah,
we don't want to jump into that.
No, that's for my prime minister to talk.
There's so much gold in the country. It's like there's no gold by the country. It's weird. In the country, but not owned by the country. Okay, we won't jump into that. What about Bitcoin?
Oh man, I'm so simple. I'm good at what I know, and outside, then
Have you heard the digital gold comparisons?
Yeah, I have heard that. I'm not savvy enough to give a coherent or advice to any of your listeners.
No, I don't need any advice. What are your thoughts? That's all.
It's an interesting concept. I mean, the banks won't like it.
Yeah.
It would solve a lot of problems. It's great for the gold miners.
Yep.
So it's got a lot of merit. It may break down the whole banking industry, So
that's what it's here for.
yeah, be careful what you wish for, because it seems to be working.
Yep.
And but
well, the banks are doing that on their own, but yeah.
Yeah, well, they're good at it, but
yeah.
So yeah, no, I think it's got some merits, and it's definitely good for the world.
They call it digital gold because it's fighting the same fight. Gold is about sound money, right? If we could go back to a gold standard, having hard sound money that's not manipulated or inflatable, and Bitcoin is a hard asset that can't be manipulated or inflated. They're both taking your money out of the banking system. And both getting back to a sound unit of account, if you will. So they're both fighting the same fight. One is older and one is newer. One's technology, right? But from that perspective, they're fighting the same fight. That's what I say. So that's why I like them both. I think I say for example, my grandparents would never own Bitcoin, but my kids will probably never own gold.
Right.
Maybe.
Yeah.
We'll see. Okay, great. So then back to the simple formula, and we'll cap it off with this. So the first one was picking a cycle, which you've already explained that one. I appreciate that. The second one was building a good team. So you have experience. You've brought your team with you. You have Robert. You talked about your board, et cetera. And then I think what I wrote down, the third piece of your formula, your simple formula that makes you billions of dollars, was leverage. Right? You talked about leverage because instead of just buying the physical uranium, you said, why don't I just buy the uranium mine? I have leverage, and I think gold is the same way. So I can buy physical gold, and maybe it goes from 2,000 to 4,000. But if I own a gold miner stock, it could go up 10x or whatever. Was leverage the third piece of that?
Yes. So, yeah, leverage is definitely, and that's to do with the increase in the price of the commodity. For instance, we have 7 million ounces, right? And you could buy the stock for $4, okay? And if gold does go up by $200, it goes up $200 on 7 million ounces.
Yeah.
Okay? And it reaches the bottom line on the market cap and our share price. That's where that happens. So,
so $200 in the gold price is a big jump for a $4 stock.
Yes. And so that's what we need to do. We need to show people, tell people that that's where you get your greatest leverage.
Yeah.
With the companies that have, 6, 7, 8 million ounces. And that it's also attractive, that leverage, to companies like the large companies. They don't want to work on 1 million, 2 million ounce deposits. They want to work on 5, 6, 7 million ounce deposits because it's the same work. They got to deploy the same type of intelligence and people. Right. So they're always looking for bigger and bigger, and they need something that moves the needle on them.
Okay? Good point.
Okay, so that's good. And then if you're looking for financing to build the mine, having those 7 million ounces gives the lender a lot more comfort that they're going to get their money back.
Yeah.
Okay? So that's another good. So that gives me lots of optionality, in either selling or building. And that decision would come down on what's best for the shareholder. Okay. And another thing that I might add, a success, is because I'm usually a big shareholder, I think like a shareholder. I want the same things like a shareholder. That is a high share price. So it's good to have your CEO, your chairman, the board of, own a lot of shares.
Right. That's a good one.
Motivated by share value. Okay.
Do they have skin in the game?
Do they have skin in the game? And, because that's the real thing. They'll say, when you've got, 4 million shares, they go, do I want to dilute? I'm thinking like them. Do I want to dilute my fellow shareholders?
Yeah.
So you think twice about it.
Great. That's good stuff. Good stuff. That last point that you just brought up is such a big one, and we didn't touch on it. And I appreciate that you brought that up. Yeah. With that, I think we'll go ahead and wrap it up. I mean, I could keep asking questions for so long because it's not often I get to sit down with you. But I know you told me I was pulling you away from your hockey game, so we'll get you back to that.
Okay. Thank you very much, Mark. I really appreciate it, and good to know you.
Yeah, so Paul, CEO of GoldX, gold mining, and where would people go find out more information about the company, or if they want to follow you? Do you have anything that you want to send people to?
goldxmining.com is the place to find us. And we're in the TSC, GLXD.
Okay, cool. Well, and I will definitely link to that in the show notes for everybody that's listening. And with that, we are going to go ahead and sign it off. So thanks again, Paul.
Thank you.